Wonder why it seems like your lender has to cross-check everything a million times? It's because of this right here. There is so much fraud in the mortgage and real estate industry. In addition to making sure we calculate everything right and don't miss any debts that you're not disclosing, things like that, there is so much fraud on top of it, with number one being occupancy fraud. As you can see, this says misrepresentation of primary occupancy. What that means is claiming that something's your primary residence when you're actually going to rent it out or use it as a vacation home. The reason this matters is because that's a lot higher risk. People are more inclined to pay their mortgage on a primary residence if they ran into financial trouble than they are on an investment or a secondary property. That's why the guidelines are different on those. Lenders are required to check on compliance items well after a loan closes. And one of the ways we do that is we check homeowners insurance policies to see if maybe suddenly there's renter's insurance or public records. We're going to do internet searches. Was something that you bought as a primary residence suddenly listed for rent? We can also check your driver's license renewals, voter's registrations, vehicle registration to see if you're actually living in the house. What are the penalties for this type of mortgage fraud? Well, if you've been to a loan closing, remember that big FBI seal that says mortgage fraud is a felony? They are not joking. In addition to fines and legal trouble that you can get into, a lender can immediately recall the loan, which means we're going to demand immediate repayment of the loan. The lender could foreclose on the house. Your credit score will likely be damaged. And of course, as I said, the legal action. Bottom line is, we aren't just asking for documentation and looking everything up to be a pain in the neck. It is because of things like this that happen all the time.